Hey everybody, this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. Well, happy Monday, everybody, and happy Easter, since we just barely had Easter yesterday. I hope everyone enjoyed some time with their families and all that good stuff. To be honest, I wasn't entirely sure if we were going to do a vacation last week, so it kind of happened all at once. The wife's like, get out of here, and so we got out of here. So there was very little warning, so I apologize for that. But we went and had a good time, got ourselves some good sunburns out in southern Utah. There's a lot of red rocks and things to climb on and everything. We had a good old time. It was awesome. So, but yeah, nice to be back. I'm really happy to be hitting the ground running today, and some really exciting things happening today on Bitcoin. Before we get too far, just wanted to remind you that my home base is at cryptoinfluencers.com. The free channel is here, and my paid one is here in case you'd like to learn how to manage your risk and how to actually get that all done. So, and then Wednesday, we do live streams at 12:30 when I'm in town. So that turns out to be almost every other week. So we're good to go this Wednesday. I don't foresee any issues. Okay, so with that out of the way, let's take a look at Bitcoin. So, funny thing is this I drew this morning during our Pro Channel stream. So we're still doing a daily video on the Pro Channel, and we were watching so closely last week how we were interacting with our 20-day moving average. And the consensus was that yes, we are right on the line on our 20, but that we've been going sideways for so long that it would take us approximately 8 more days of going sideways before our 9 crossed the 20. And so there was a lot of reason why things were almost going to break but hadn't broken yet. And I'm really an under trader than an over trader. I don't like to over trade. I like to wait for evidence to push me into a trading decision. And so we waited. And then yesterday's close was right here. And then this morning we woke up and I was like, man, we sure have a lot of resistance right at this line. And if we got a bounce off of the 20 here, especially when we have a lower swing low here, and this bounce was pretty defined. Like this move off of the, overcoming the candle bodies of the prior 6 candle bodies. This is a pretty big move, yesterday's close. So I said there are 2 ways this is going to shake out. I said if we even touch the 20 at this point, it's really bearish. If we come back and touch this, I'm probably going to close everything and go short for a little while. And because we've built up all of this pressure and we've moved up so well, and this close was big enough that we are in range. It would be extremely bullish to drop back down and reverse this, or bearish. But we're starting in on a tiny little green candle this morning, right at the top of this ascending triangle. And the greater than 50% outcome is that you break out of a ascending triangle to the upside. And the target on this is about 30,000. It's a fairly small wedge. So our number is about an 1850 breakout from our baseline. So we've already taken care of some of that just by our day's action today. We've already moved $600, but 1800 would zoom quite a ways to get more room up here. 1800 would give us a price, 1850, yeah, about 30,000. So 30,000 is the target from this little wedge here, but I think our move is getting a little bit exhausted, even with this breakout. And the reason why is because had we not pulled back to 20, this would be really overexhausted. But we still have a little bit of ammo in the tank because we didn't have a price-based correction. We had a time-based correction. So this move sideways for over 3 weeks allowed all of our averages to reset, everything to kind of chill out, and then the next move is to the upside. So what's happening, I guess I didn't explain this to you guys. I explained it more to the pros. But what happens is when bulls have an impulse, so this was a bull impulse that moved us all the way up to here, and then it kind of, it fatigued out, and then you pull back. And so you have kind of a small correction. So even though you're in a bull macro move, you'll have these little breaks to pull back and gain some footing before you continue on into your bull moves. And what that does is it drops your APIs back, or your RSI, your other indicators. They'll kind of drop back to sort of a neutral place, and then you can continue on from there. Well, what happens when you get a really big pullback, this kind of got us to an oversold territory, even though we were macro bullish. Well, this move here was a huge move from 20 to 28, and then we've been going sideways. But what happened is we went sideways for so long that we either, at a certain point, a lot of these indicators have a max of about 14 days. Average true ranges are based on 14 days. RSI is usually 14. Bollinger Bands, they are, I guess their average is 20, so that's not quite the same. But it's usually between 14 and 20 that you hit the majority of all of the indicators. So these emotional cycles and these market moves usually happen in about a 14 to 20 day window. And we had gone quite a few days without a strong move. So we were sitting at 20 right here, and then day 21, we were closed on the 20-day moving average. Day 22, things were starting to fatigue. So at this point, we're either going to pull back, or perhaps we've consolidated for long enough. And I was speculating with the Pro Channel that in this case, I believe we have gone sideways long enough that our downside is being resolved, because our RSIs and all of our indicators are chilling back out because of this tiny little move to the downside off the top. And it allowed all of our indicators to reset. Then it actually gives us the ability to push up again. This isn't great structure for long term, though. I mean, this can play out in the short term, where you've kind of consolidated sideways and then you do another push. But if we do come back for support, yeah, you'll normally hit an area where you hit pretty significant resistance. But this gap between here and here is going to be kind of put people on a question mark. So there could be a wick in the future to pull us back down. So I think that this move's getting close. I would have expected it to happen earlier had we just pulled back and gone to 25. This would have been the more healthy of the outcomes. And then pulling up to here, we still need pullbacks as we go. So there's still a chance that if we hit 33 or 34, that we'll return back to 30 to gain footing, even if we're in a bullish impulse. So this is kind of the things that I'm watching out for. But this breakout is unmistakable, and this breakout should resolve at least at 30,000. The most likely scenario, though, is that we hit our 100-week moving average, and this has kind of been my target for a long time. So since it is Monday, let's look at our weekly close, and we can kind of see what's happening. So intra-week, we just today, we have put in a high that's the highest for the year. So this is our highest. Today we traded higher than it at any other time during the last year. And, you know, of course you can always go back since June of last year. So this is kind of a major breakout. The breakout happened when we broke our neckline here. Normally you would come back and find support on the other side of the neckline, but you don't have to. And the reason you would not is if the bulls are super excited. And you can see how much the bulls are excited by the action of the past 5 candles. This massive breakout was huge. Normally after something this big, you would come back for a candle or two. Even if you're in the most bullish situation, you'd at least come back to nearly 50% of this large candle. And the first thing we did was pull back about a quarter, and then bulls bought it back up. And then we threatened to break out and break down, and bulls brought it right back up to here. And then last week, this is the one we just closed. It's probably the most bullish candle of them all because we have a long tail and a shorter top. So there's more buying pressure than selling pressure here. But none of these candles allowed us to get back to the 200. I was absolutely waiting for this. And so if you have this big of a move and there's no counter to that, there's no recovery back down to kind of gain some footing, that means that the bulls are hungry. And if the bulls didn't let it go down, or the bears didn't gain an advantage over the past 3 weeks, this is a very, very high chance that we have a breakout candle. We're probably going to continue up, and this is our number. This 33,500 is the most realistic target, and there's a lot of reasons for that. We have resistance on our weekly right here. In fact, we have several. So this is 31,700 right here, and we have tons and tons of resistance right up in here, and we haven't even touched that area yet. So at a minimum, we're going to hit 31,700. We will most likely wick up to the 100 because these numbers are usually huge. I bet we get a candle body close here, but I bet our wick touches the 100. That's how I'm reading the weekly chart. So this is definitely a time to be long. This is pretty good. So you all know I've been long ever since about right in here. Like I think ever since this move. Yeah. When we had this bullish engulfing that just didn't give our bears a break right here. I rode this for 3 weeks to the downside, and I've been in that mindset where I just don't care because I know this macro, we're absolutely bullish and I want to be on the right side of it. So every single position I have is in a long position. That might change though when we hit 33. This is where I'm going to start getting a little bit more squeamish because we've had a pretty strong move, and even in a bull market, you'll get periods of recovery, and especially during the beginning when we're just breaking out. A lot of these first early periods when you're just getting out of lows, there's generally a lot of ups and downs. So this is the most likely scenario in my mind. So could be wrong, but it's looking really, really good. Also, we're on April 10th, so we're a third of the way through the month, and you can see where our monthly targets are. From a chart structure standpoint, 35,000 is the most realistic target on the monthly chart. That doesn't mean we have to do it this month, but at some point we're going to probably hit that. The lowest resistance is the 20, which is sitting at 32,000. So we've got about 3 reasons why 32,000 is going to show resistance. So we have 31.7 on the weekly chart. We have 32.2 on the weekly, or on the monthly, and then our 100-week moving average is giving us 33.5. So we have a range up here where we're going to start slowing down. So I would not expect a gigantic candle to just blow through this and hit 40 and 50 and all those numbers that everyone will start chanting for once we start really getting on the move. So anyway, that's kind of how I'm playing this. Every market has a recovery period, and I'm loving this long period, and we'll take it for all we can get out of it. But when the alt market and the other markets start cooling off, I bet there will be a pullback. Okay, so this is something I haven't shown you guys for quite a long time, but I have this little matcher, and the reason I haven't shown it is because it hasn't made any sense for a long time. So this has been the most likely scenario for quite a while, this 2020, because it's the only other time in Bitcoin's history where we had a really strong impulse, about a 50% move. This move from here, it was like 9,000 up to, we ranged in 11, so it wasn't quite 50. It was more like 35 or so % move. And going from 20 to 27 was, it's kind of in there. So this is why this has showed up on the matcher. And the only other time we did that, we were in here, and we did eventually break down. The difference is, look at this chart. Well, I'll pull it up on the normal. So this is August 24th of 2020. So let me just zoom out and we'll go take a look at that. Here's the analysis of this chart. So right here, it had been, here's our day 21. So here's where we were ranging. In this case, we had touched the 20 a couple of times, but we weren't all over it like we have been. In this case, we had a big candle to close through the 20, and then we hit it as resistance. And then we hit it resistance, quick breakout, bearish engulfing, and then we were down. So there was a fair number of signals to say that things had weakened out. This breakout, though, is pretty interesting. So this would be very interesting to see whether our breakout is sustained or not. But from a timing perspective, we were definitely in an ascending triangle at the top of this. So there were a lot of similarities here. We had gone up, and without all this volatility, had gone much more sideways. And our 20 was in our range. Like 20 was way up in this range. Once you pull back and lose the 20, you kind of have an indication that there's weakness ahead. And that is not something that we're seeing right now. Right here, we've pulled up really, really strongly, but we've been in a very tight range, and so tight that our 20 has gotten in here, and we've been all over it. The more you touch a resistance, the more you touch a line, the more likely it is to break. And so by here, I was getting very nervous because we've already touched it quite a lot. We got 6 days in a row. And then because of this close, this was kind of the deciding factor. So we are definitely popping up. In this case, our 9 has not crossed. We have not had a close below the 20. So all of our structure is still intact. There's no signs of weakness, the same as we were seeing back in 2020. So we'll be watching closely, especially on the Pro channel. We go over this every morning. But it is looking pretty nice. So Bitcoin dominance is kind of taking over the world right now. We have been watching this range for quite a long time. Ever since March 20th, we've been in this really tight consolidation on Bitcoin dominance. And just today, we may be leaving this area. So right now, Bitcoin is the winner. Bitcoin is moving faster than the rest of the market. That will not always be the case, and it won't necessarily be sustained. And honestly, the time to be in Bitcoin was down here. And so by now, it's riskier to switch over to Bitcoin, even though Bitcoin dominance is moving, because this move could be exhausted. There may not be much left on this. So I'm pretty comfortable where I'm at. I'm a little bit heavier in alts and Ethereum, and I'm totally comfortable with it. They will ride as they go, and they'll come around. So, but there are a few other spots of resistance that we are watching at 48.3 and almost 49 So if Bitcoin gets up into here, it'll be pretty amazing. But that just means that tons of money is flowing into everything. And that's when alts can get moving. So anyway, I've been watching this, seeing if there's a breakdown or a break up, and we're moving up today. So that means Bitcoin's taking front row, the center stage, and then the rest will be checking. But that's not to say Ethereum looks terrible. In fact, I like the chart of Ethereum better than Bitcoin. This chart looks unbelievable. Ethereum is absolutely killing it. We have such a beautiful resistance point here, and it didn't start here. It started all the way back. Well, let me double check on here. Yeah. So anyway, we had kind of a range back up in here a long time ago. But yeah, so we've been showing kind of resistance all through in this area. When we finally broke out, what you want to see is a breakout, and then you want to see a return back to confirm support on the other side of it. So we did that. We moved all the way up. We established a resistance, came back and found it as perfect support right here. And we did it in a short enough time that we allowed our 20 to kind of move up and give us support off of the bottom here. And then we revisited our resistance, gained another foothold on the 20, and then we broke out right here. Well, what did we do yesterday? Yesterday, our wick brought us right down to our resistance line. Just perfection. I mean, just the structure here is just phenomenal. And so, Ethereum, we have pulled back. We did get our flip from resistance to now support, and now Ethereum is starting to move up. Well, the structure of this is really, really pretty. Really pretty. So all we have to do is overcome 1909, and we will be ready for our next impulse. And our next impulse should bring us to the 20,000 that we've been waiting for. Technically, our number is 1986. So that's our real number. But if you go to the weekly, I believe we have a different number. It was a little bit lower. Yeah, 1932. So this was the thing I wanted to mention on the weekly. On the weekly, usually when you're approaching an important resistance, the candle body is usually the number. So we've had kind of an interesting thing going on. Haven't put this in the chart, but this resistance here is in play. This slip right here normally would move our line down, and we'd have been watching this, but the second this candle showed up, it put it right back. And this resistance here is perfect. Like, look at this close. This was 1933.53. This is 1935.31. This is within $2, these tops, or these closes. So there is an absolute, this is probably the most important line on Ethereum's weekly. So if this line is so important, normally how you interact with this is you usually just barely touch it with a candle wick. That's often how this plays out. So we have candle body, candle body, candle body. These are defining our line. And then you would expect a little wick right up to that resistance line. And look what we did. Perfect wick right up to here. It was just a hair over, but just barely tagged it. So what's step two? Step two is a weekly close on the line. I am betting that this week we close at 1934. Because in the daily, we have all this beautiful structure giving us support, moving us up and out. And on the weekly, this is our number. So 1934 is the number. I'm betting we close there. We can wick up above. In fact, it'd be really healthy if we wicked up above. But I bet we settle down and close on this line and start a new candle either on the other side of it, or maybe we come back for one more level of support. The daily doesn't show that it's needed because we already have perfect structure on the daily. So if we came and closed in here, we wouldn't necessarily have to pull back to gain, because we've established this already. I mean, any pullback would be back to 1909, and this can happen on a wick. So this is like we've got some blue sky ahead of us. because of the daily. So this weekly, man, if we get here, the next step, like the only other thing that's in our way is our 100. Like this is it. This is the 2350 that we've been waiting for. So we're finally getting the structure that we need. I'm telling you, exiting the yellow zone on Bitcoin and Ethereum on the weekly is just phenomenal. This is such a big move. Like this is the move to get us started. So this looks awesome. We can glance at the monthly, but yeah, no surprises here. The monthly, the only thing that would make sense is if we came and did a support candle, but this is at 1686. The daily doesn't support that. I don't see this. I don't see us returning back to here. And you don't have to either, because look at how the monthly just gets running. You can have structure here, but it's fairly rare. It's usually bearish or bullish. You just kind of run. So this is what the most likely scenario is, that this just goes straight up. And 22, almost 2300 is our spot. I'm betting we find resistance right here at 23, and then we might have like a more kind of official pullback. Let's take a look. Yeah, we don't even have any other data. Our longest, yeah. So with Ethereum showing up on scene in 2015, we don't even have a 100-week moving average to even point to yet. So the 50 is all that we've got, and we exited that right here. Yeah, 92 weeks. So in 2 months, we will have our 100 month show up on this chart somewhere, and where it'll show up, probably like 100, like it'll be low. I'm thinking like 500 max. It probably will be even lower than that. So yeah, like 100, 200. So it's way down. So Ethereum is just full, like we're moving straight up. It's beautiful. It's a good time to be long on Ethereum, I have to say. So there's a pretty good run. The rest of the alts are kind of in shock because Bitcoin moved so quickly this morning. I don't think many people were anticipating that. I sure was not. We watched it happen during the morning video, but yeah, I didn't know we were going to go from 28.5 all the way up to 29.3 in one move. I mean, we have the structure for it, but yeah, this breakout happened right at 28.4. Yeah, 28.450, and now we're breaking out. We have 4 more hours on this candle, which means it's probably going to hold. Like this is happening. So awesome. Okay, well anyway, yeah, I'm hoping to be back and we'll be more consistent this week. But it's really fun to just dig in and analyze the crap out of this, and it's also fun to be right, man. It's good to be long when the market is pumping up like this. But yeah, my targets haven't changed for a long time. I'm waiting for the 100-week moving average, and then I bet we start getting a little bit more serious pullbacks and doing what we should do in year 3. We have 1 year of bear market. We have 1 year of consolidation. We have 1 year of moving towards, to breakout zone, and then we have our blow off top. So we're still in the year that we should be consolidating. This is the year where we should be going sideways. And so it would be really odd if we just went blowing through our 100-week and just launched off. I still think we could cool off even up between 40 and 50. I mean, there's technicals. There are technical reasons why we could consolidate even up to 60,000, but I just don't think we'll get there all in one shot. So I'll be really watching this area as kind of a potential short-term target. Okay, that's it. Thanks guys for being here, and we will catch you tomorrow. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.